Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday. And we are right now, where are we now? 9th of February, 2022, 6:30 p.m. Now, before I get into the markets, I want to remind everybody, our What's Up live webinar is tomorrow. How do you attend? If you haven't received my invite by now, you're not getting it. Not that I don't want to send it to you, you're not in our database. All you need to do is take your cursor right now, move it up, right up here, click on that, you'll see an icon, fill out the form, that's the invite form by the way. You'll immediately get an email with your user ID and password and you can come in. The webinar will start promptly. I'll open it at 12:15. I started at 12:30 and I end it right around 20 minutes later. I don't go much over that. And that's it. Now, we've got a lot of questions coming in already. A lot of people on the different spiders in the ETFs. If you'd like me to answer your question, no problem. You can send it to me or during it you can ask, but during it, I get to them after I've done the charts that other people have asked me about with whatever time's left. Okay. Tomorrow's a huge day as we look at the market on CPI. We're getting numbers that the market's looking for, the year over year, 7.0 to 7.6%, about a quarter, rather about 0.4 of a point for a month over month increase, and core CPI in that same area of about 0.5% increase. I think a 5.9% is what they're looking for. Many people are saying, okay, a real hot number, what does that mean? Or a number that's not as hot. There's so many ways to take this. Some will say inflation is peaking, and they'll look to say, okay, regardless of what the number is, come March, the market's going to look at another set of this, and if it's not as bad as you have right now, the Fed will go, oh, what if it's hot now and hot then? Then you probably get more interest rate hikes. Either way, this is all about inflation. There's different schools of thought as to where we're at. Just before I came on, I'm listening to the local news, and they're talking about auto prices in Chicago. And they're saying for months to come, you're not going to be able to get brakes on cars. The prices continue to go up. Yet if you watch the national news, they're saying the exact opposite, that they think part of that's behind. I guess it's local market, I don't know. But they were showing all kinds of different prices on cars. You know, it's local news, and they were showing things to try to tell people. Again, the inflation story. The other thing before I go into this that we have to be watching is the COVID story. It's getting way better. Sweden today doing away now with all the restrictions. The UK is just about there. New York has lifted them for their offices. Chicago today announced that there'll be no more mask or vaccine mandate required. When I say vaccine card mandate required after February 28th, assuming we don't get another outbreak. So you're no longer to go into a restaurant or into a main building and show your card or have to wear a mask. I think this all ties together nicely with spring coming about when people are outside, and we should get falling of the COVID spread anyways, but getting back to normal, that's the important thing. So when we look at gold, it's trying its darn best to come up here. And it is nice. The market is up 1.5% right now for the week. Now, the question is, after tomorrow's report, is it going to be higher, or is the market going to set back because of that CPI number? That's going to be the hardest thing. You've had a nice run in the market back to the upside. The trend is higher lows, higher highs. The market is over all the key moving averages. As I showed you yesterday, the resistance is way up here. It's been in the 1859 to 16 level. It's climbing a little bit because prices are coming up. And that's the function of the Bollinger Band. Support now under the market about $12 lower at the 1821.80 level, and momentum still pointing up, and very important, not in overbought territory. So I'd say that tomorrow, you know, when we get that report at 7:30, buckle in because something's going to happen there. At this point in time, the trend is up, the bias is up, you're not overbought. Target is still 1861.30. Initial support 1821.80. If that gave ground, 1801.70. The gold-silver ratio, silver's still not able to show that it wants to mount anything strong against the gold market. And you see that right here. It's been fighting now 3 sessions, including the early evening tonight, fighting at the combination of the 18-day average and in green, the 100-day. But the pattern isn't bullish. It's a pattern that is out of the downtrend, but it has not given you a pattern of higher highs, higher lows. This is when you end the downtrend, you go back and you sort of stall a little bit. You know how bullish I am copper. Can I keep saying it anymore? You again went for the upper side of the market. You're fighting at the upper Bollinger Band. You also are overbought. So what do I think the pros are doing up here? As bullish as I am, the right thing to do is take money off the table. Each time you've hit this Bollinger Band, you've been able to come in again on breaks back to the 18-day average. And I know one of these times that won't be the case. You don't play for one of those times. You trade the market accordingly. You have a pattern of a lower low, higher high, overbought, and at a profit-taking zone. That's my definition of it. In the platinum, you've been correcting, and you have corrected, past tense now, an overbought market. It came down, it's fighting, current tense, a battle at the 18-day average of closes. The swing line is down, but the bias is up, and momentum is sort of flat right now. In the palladium market, you fell, corrected when you lost the embedded reading, and the one thing I said is now that you're down here, and I think I said this yesterday and the day before, on bounces, look for the 200-day average to be some of the resistance. Now, if we got terrible numbers out of CPI, I don't know what it's going to do for these markets. If you got under 2165.50, you certainly opened the door for that. If you get a hot number and the market likes the inflation idea, up and away you go, and you got to clear 2315.70. And if you can do that, you put everything to the upside back in play. It's a hard day tomorrow. I've decided to bring back some Bitcoin analysis for you. So, yeah, turn your eye up there. What do we have? We really have a market here with higher lows, higher highs. When the market got itself up here, that was the time to call it a day. The first challenge of the upper Bollinger Band, number 1. Where did this market set itself up that it should rally? I want to just show you this. If you've taken my enhanced Bollinger Band course, right here, when it lost it, that set up that we should start seeing a market form a base and eventually get to that 18-day average before new lows were made. It's exactly what occurred, not even remotely off from what I teach. There's no 200-day average on this because you don't have 200 days of trading on these yet. In the March dollar index, you're back into a downtrend, but I'm not overly bearish here. You've got the support of the 100-day average. I know the market's in a downtrend and it's oversold. Hard to tell what the CPI is going to mean tomorrow. If you can clear the highs of Tuesday, which were 95.74.5, it certainly puts into play getting back to the 18-day average and maybe an argument that the market has got a trade bottom of sorts in place. It's going to be a big day tomorrow. I don't want to be one of those guys that's jumping ahead of myself. I think I'm going to be ultra cautious, looking to see what the market does after I see that number. I think we get consumer sentiment the next day, but I'll be watching this number very carefully. Again, it's going to be a great day for the webinar because we're going to have all this under our belt and so much to talk about. If you want to attend, just move your cursor up here. You'll see the cursor show, the icon. Click on the icon, fill out the forms, away you go. And if you want to write me something to cover, my email address is in the return email you'll get. Just do so. I'm Ira. You have a good day.